Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. I don't know about you, but I am so happy that we are finally back into earnings season. This morning, there's been arguably more stock-specific headlines than the entire last week combined. So stuff is flying around. There's like a ton of volume in individual stocks. It's like just so much a better environment to trade, especially options, right? Now, as we kind of get into the quarter, it's just going to keep getting busier and busier. We haven't had a big tech name yet, but that will change tomorrow night. We have Netflix, right? And I obviously put together all of like the earnings on the radar videos, and I'll do other videos that specifically talk about individual setups. And within those videos, you hear me say like the price didn't move, and some of you may know what the price didn't move is or how to calculate that, but some of you may not. So just quickly, I want to go over it because you're going to hear me talk about it a lot. You're going to hear me, you're going to see me write about it a lot as we get into earnings season here. Um, the price didn't move it's very easy to determine what that is, and the price in move is essentially what the option market is expecting for movement on the specific catalyst. Okay, so there's a price in move each week for a stock that has weekly options, but it becomes more important around these events because obviously options are going to be elevated because of like earnings or if it's a biotech and reporting data or if it's like a Fed meeting, right? So everybody wants to know what's the price to move. Netflix, right? Reports tomorrow night. Everybody wants to know how much are the options anticipating. Are they anticipating a huge move? Are they anticipating a small move, right? And it's very very simple. It's a quick way to do it, right? And it revolves around knowing what a straddle is. Okay, so a straddle is an at the money call and a put with the exact same expiration, exact same strike. Okay. Now I'm gonna pull up the option chain here to kind of go over what I mean. It's a straddle. So it would be so say for instance like Netflix is trading. Let's say it's just about near 285, right? The closest expiration would be this week. The straddle would be the 285, so that would be a long call, right? Long 285 call and long 285 put, right? So to calculate that, you just add the two, like the call, the 285 call, and the 285 put together. All right, and you get a move just about taking the midpoints. You get a move just about say about 28 and a half. All right, so that's the expected move, right? So it's the 285 call plus the 285 put. So the closest expiration straddle that'll give you the pretty much the best idea of what the price to move is, right? If you want to be, if you want to be, specific and a little bit more, some people are sticklers. You can say you can back out the theta, right? So if you wanted to back out theta for each session after the earnings report, you can say like that's the exact move. But for all intents and purposes, what you need to know is that the price to move is the closest to expiration straddle. Okay. Now it's nice. Netflix has weekly options. Obviously, there's going to be certain stocks that don't have weekly options, so it's going to be a little bit more complicated because, well, not complicated in the sense that the math is complicated, but in the sense that, so say for instance, like this Mercado Libre, right? They're going to report earnings probably sometime in the next 2 weeks, but they only have monthly options available. So in that case, theta is going to be a much bigger component because you have more time, right? They're not going to be weekly expirations. So theta in that instance, maybe you want to back it out of the straddle. Um, but just to give you an idea, I mean, you kind of add it together the same way. So say like the 580, right? So you calculate it the same way. You're looking at about like a 68 point move, right? If you wanted to back out theta, you can do that. But just for a quick and easy calculation, that's how I go about doing it. When I do those earnings on the radar videos, you'll hear me say monthly, and that's what I mean. So if they're not weekly contracts and they're monthly, they probably have more time, so maybe a couple extra weeks. So you hear me say monthly contracts, and that's what I mean. Like they don't have the weekly available. So the straddle is going to have more time value built into it. All right. So as you can see, very very simple, very quick. If you have option chains available, this is very easy to do. If you don't have it available, you can go to like Yahoo Finance or Google Finance. They list the prices for options, so you can do that. It is delayed. Those quotes are delayed, but still at the end of the day, you can still find out just kind of like a ballpark of what they're looking for. So if you don't have option service, that's a way to go about doing it. All right. So like I said, it's going to pick up real fast. Goes from like 0 to 100 tomorrow night. Got a bunch of tech, and then really for the next 2 weeks, it's going to be absolutely slammed with big name after big name after big name. All right. So questions or comments, please don't hesitate to reach out. I'd love to hear from you guys. If you like these videos, or if you're looking for specific trade ideas, definitely follow up with the link in the description of the video for more information about options to play. All right. Have a wonderful night, and I'll talk to you all tomorrow.